Good. So today we're doing cash flow, the past question. I think CIB past question. That's the trial for the day. So CIB past question, trial for the day. Okay, so if you have created a question, let me know. So we are doing, I think, question number, is this one? No, not this. Which one again? Question number, good. So Adom Ltd. So that's what we are doing. Adom Ltd. Good. So it will be Adom Ltd. So we will go through soon, and then you will be fine. Good. Good. Let's go to the requirements. So the requirement states that prepare a statement of cash flow for Adom Ltd. for the year ended 31st December 2016 in accordance with IAS 7, Statement of Cash Flow, full stop. Use the direct method to show the cash flow from operating activities and reconcile the profit to cash flow from operating activities using indirect method. Good. So it means that with the main question, we are using the direct method or the direct approach. That's for the main question. Then when you are done, try and use the indirect method again. The answer should be the same to reconcile the difference between profit and what cash. Because we said the cash flow is just there to reconcile the difference between profit and cash. Good. So that is it. I hope you get it. Now let's go. As usual, right approach, requirement first, additional information, the trial balance or the financial statement. So let's go to the footnote. As usual, you know that the cash flow, the footnote are not many. No, not plenty. So now let's see note 1. It says that non-current asset schedule, that's the PPE schedule, for 2016 is as follows. So costs at start of the year. Good. Probably let me do my okay. Now let's come. Good. Now, non-current asset schedule for 2016 is there. Cost at the start of the year, 72,000. Impairment loss, 3,500. Impairment loss. Impairment, depreciation, amortization, event written down. Probably they're in the same ship. So how you treat depreciation, that's the same way we treat impairment. So under the cash flow, if you are reversing depreciation, you have to also reverse impairment. Impairment is like a loss that we have incurred. Loss that we have incurred on the assets. It does not have cash flow. There's no cash flow involved. It's not paid for. It's just a mere written down value or a mere provision made in a book. So impairment loss will be also be reversed. It's a non-cash item. Examples of non-cash item. Impairment loss is one. Examples of non-cash item. Good. Okay. Disposal during the year. The cost of the asset disposed is 4,500. So the asset that is sold, the cost is what? 4,500. Why? Because it's under the cost shedding or the cost position. Good. Then cost at the end of the year. So that's the closing balance of the cost. Then we move on to depreciation. Depreciation at start of the year. Salvation, this is the workings for the remover. Cost from cost, accumulated from accumulated depreciation. So depreciation at the start of the year is 14,000. And then disposal, the accumulated depreciation of the disposed asset is also 4,000. Okay, that's good news. So what do? Then charge for the year. So if you want to calculate the carrying amount of the assets, carrying amount of the disposed assets, it will be the cost of 4,500 less accumulated depreciation of 4,000. So probably the carrying amount of the asset is what? Of the disposed asset is 500. So that is it. Now, charge to profit and loss included in admin expenses. That's the depreciation charge for the year. That's the depreciation charge for the year. Depreciation charge what for the year is 2,000. So if you're looking for depreciation charge, that's the charge to profit and loss included in admin expenses. That is it. Given a closing balance of what? 12,000. So this, when we take this from the cost of 64, ideally we should get a carrying amount of what? 52,000. We should get a carrying amount of 52,000. Then, so it means that when you go to the financial position for the current year, you get a non-current asset of what? 52,000. Yes, that's the 52,000. Good. So in exams, the examiner can just show off the carrying amount. Good. Now it continues to say that fixed assets disposed of during the year were sold for 1.490 million. So that's 1,490,000. Good. Or that would be 1,490. So what are you going to use this figure for? First, to calculate the profit or loss on disposal. If you calculate it as profit, you reverse it. If it's a loss, you reverse it. Then second, the proceed from disposal is an investment activity. You send it to investment activity or investing activity. Good. Then we are done. We go to note 2. Dividend proposed for the year 2016 amounting to 2,500. It means that we have to use this to calculate the dividend paid. We have to use this to calculate for the dividend paid. So that is it. Then note 3, income from investments represents interest and dividend received during the year. So when you go to the P&L, there will be income from investments on a P&L. So let's go to the profit or loss. So that is it. So you can see here, there's income from where? Investment. That's 1,100. So they are saying that this 1,100, it is as a result of what? Dividend and what? Interest received during the year. Once it has been received, we are going to add it to investing, but it is not an operating activity, so we will probably knock it down. Therefore, add it. So we have to reverse it. Good, because according to cash flow, dividend and interest received, in fact, the other income received supposed to be a form part of what? Investing, not the operating activity. So we will have to reverse it. This alien item. Okay. The last note. Prepayment is in respect of what? Rent, which is part of the administrative expenses. Okay. Prepayment means they have subtracted it, so we bring it back. Oh yes, they have subtracted it, so we bring it back. No, it has not been reflected. We bring it back, and we are going to reflect it. So we will add it to the expenses, or we will subtract it from the profits. Then we are done. So this is the few notes, 4 notes for us to go through, and then you are fine. Good. Now let's see. Now let's go and scan through the financial statement. So scan through the profit and loss, and then the financial position for both current and then the previous year. Scan through. Is there any item which is new, usual, and unusual? The usual item, just jump it. And don't forget that we are looking for profit before what? Profit before tax. So you scan through. Whilst you are scanning through, you are looking for the items that you start with. So it says summarized accounts of Adom Ltd are given below. Statements of profit or loss for the year ended 31st December 2016. They are there. Turnover up to profit after tax. Good. So that is it. Now, you can see there's profit before taxation. That's what you pick. For the cash flow for operating activity, you add back the interest expense to it, and then you are fine. That is it. Statement of financial position. As at the dates. So have you seen how they've done it? Now this time around it's what? Previous year and what? Current year. Have you seen? Instead of the normal way. Current and then the previous. So here they've changed it slightly. Have you seen the game? So don't take it that always it will be like that. No. They may probably change it. What matters is the date given. That shows the previous and then the current year. For the non-current assets, we'll talk about it in a footnote. Once the breakdown of the non-current asset is given, you are safe. It means that if there's no acquisition of PP during the year, you are safe. So that is it. Now, investments. Investments. This investment, where will it go? It will go to where? Investing activity. That's the 6,000 and then the 8,000. Good. But if there was a note that says that we should classify this investment as what? Short term. That's cash and cash equivalent. Then we will not add it to investment. We will probably add it to the cash and cash equivalent. Whichever method that you do, it will balance nicely for you. But there are 2 types of investment: long-term investment and short-term investment. The short-term investment, which are highly liquid, should be added towards the cash and cash equivalent. Now, there are some few terms that we have to probably explain. So when I go to the board, I will explain them for you. Define cash and cash equivalent, define operating activity, define financing and investing activity. This thing should be part of you. Though probably no examiner will ask you, but you should probably understand it. That will probably help you to solve the cash flow questions. Good. Okay. So the investment will be form part of the investment activity. Inventory receivable, you know, right? Changes in working capital, you find the movement. Cash at bank and cash in hand, that's the cash and cash equivalent at the start of the year and then at the end. That's 8,000 and 9,740. Good. And then prepayments. So the prepayment is a prepaid expense. It has increased by what? 50 Ghana cedis or 50,000. This 50,000 is the additional amount that they've prepaid. They've subtracted it from the expense. So what do? We add back. When we add it to the expense, it means that we are subtracting it from the profit. It's an outflow. It's an outflow. So that is it. Good. And if you have questions, you can tap on the hand raising button so that you can probably take your question. Then that's the total asset. Ordinary share. It has increased from 60,000 to what? 75. It has increased by 15,000. So whilst there was no footnote in the question, we are going to assume that they have what? They have issued shares for cash. But that's not always the issue. When the ordinary share capital increases, that does not mean they've issued shares for cash. It can be bonus share. They have issued shares for free, so it has increased. That's it will be financed from where? The income surplus. Anytime they issue shares for free, that's the deemed dividend or market capitalization. Good. Income surplus, once there's income statement and there's dividend in the question, you don't need to worry. So we are done with the equity session. Now let's go to, we said that the equity and then the non-current liability goes to where? It goes to the financing. So under the financing, we have them there. Non-current liability, debenture. At the start of the year, it's 25,000. At the end, it's dashed. So it means that all the debenture were paid during the year. So it means that it's an outflow. Then we take it off. Good. Now let's go to the current liability. Trade creditors. Don't forget, movement in what? Working capital. Changes in working capital. Yes, so trade payable go there. Tax payable to get a tax paid. Proposed dividend to get a dividend paid. We are done. So now start work. You go to the requirement. You go to the footnote. We've scanned through the requirement too. So sorry, the financial statement. So now let's go to the board and set the tone. It's for Adom Ltd, right? Good. Wow. Sorry, it's question. Wow. Sorry, I didn't see. Wow. Madam Gloria, sorry. I didn't see your question. I just checked. We are solving question 5. I think it's question 5. It is not question. Yes, question 5. It's a question 4 in the past question, but question 5 on the list. So that's. Now let's go to the board. Don't forget the 3 protocols. Put down the 3 protocols, then you are fine. Good. So the 3 protocols, they are first the name of the company. So Adom Ltd, right? I hope you can see from this direction. Let me do it here. Do workings here. Good. So that is it. So Adom Ltd. So Adom Ltd. Then statements of cash flow for the year and 31st December 2016. Good. Yeah, you can use the two currency approach, or you can also use just a single currency approach. But let's go by the two currencies. So Ghana cedis will be here like this. 3 zeros, and another Ghana cedis will be here like that with the 3 zeros. I hope you can see. Kindly check for me if you can see it clear. Yes, because that's how it's going to be till you're done. So kindly check and confirm. Yes. You can probably type it on the comment section. I'll take it. Good. Now, we start from cash flow from operating activity. So cash flow from OA. Please, no shortcut in exams. Cash flow from where? Operating activity. If that would be a big deal, I have to step him down. So cash flow from operating activity. Good. Cash flow for operating activity, where do we start from? We normally start from where? We normally start from where? Good. I'll take that. That's the profit before tax. Profit before tax. So let's go to the question. The issue is that we are using, which method are we using first? Yes, before we even continue. Which method are you using? According to the requirements, it said that we should use the direct method. We should use the direct method for the cash flow from the operating activity. And then when we are done, so A, use the direct method. B, use the indirect method to confirm or to reconcile the difference between profit and the cash. So that is it. So it means that the A part, we are using the direct approach. So we are going to use the direct approach. And with the direct approach, we need only one currency. Or we still need the two. Okay. Yes, let's maintain the two. Let's maintain the two. If there are more than 2 items or more than 2 entries, let's maintain the two. So we are using the direct method. Direct method, we don't start from the profit, so take notes. Where do we start from with the direct method? With the direct method, we start from cash from operating activities. So cash received from customers, and then cash paid to suppliers. Cash paid. Good. So that's the first workings. And that workings, I believe you are strong in it. Yes. So you do it for me. The issue is that if I do one, you do one. 1-to-1 mapping. That's the rule. 1-to-1 mapping. Yes. So I'll do the very first one. Cash received from customers. So that's workings number 1. So open my bracket and say, examiner, please go to workings 1. You will see that figure there. So let's probably do it. So this session, they are my workings. So workings 1, cash received from customers. Good. As usual, you remember the format, right? Keep it short and simple. 3 steps. Open balance, that item. Less closing balance, that's the receipt or paid. You are done. Open balance of what? Cash received from customer. The customer, that's receivable. So pick the open balance of the receivable figure. So pick the open balance. Open balance of the receivable figure. What is the open balance of the receivable figure from the question? Yes. So the open balance of the receivable figure from the question is what? So for 2005, receivable is here. 2005 is what? Is that the 33,000? That's cash. So the receivable figure is what? 33. Closing balance is 30,000. So 33. So open balance is what? 33,000. Then what do? Add your credit sales. If there's no credit sales, just pick the total sales. So sales figure. What is the sales? Here there's no sales. They call it turnover. So probably can call it turnover. But if you have already written the sales, don't cancel it. Put it there. Then the next question, they call it what? Turnover. Good. Okay, that's the same as what? The sales. Okay. So let's go and pick the sales revenue from the question. If your background it's okay, you can probably give me the figure. So let me see. Good. Good. So you can probably give me the figures. So I have started unmuting. So you can give me the figures. Now let's go and pick the sales revenue. The sales revenue to be a profit and loss. That's 26,000. So 26,000. Then we pick the closing inventory. That was 30,000. The closing inventory of the receivable is 30,000. Good. So closing inventory is 30,000. Good. So come here and say closing inventory. Now 30,000. With that one, you subtract always subtract the closing inventory.
Yeah, one put
Now, the board is not wow. So let's see. I think I'll do something about it. If I'm in 2016, I'm preparing the cash flow for 2016. The open balance will be when?
Okay.
2015, the previous year. 2015, the previous year
Okay.
becomes the open. And 2016 becomes the closing. How big is that?
Yes, please. Thank you.
Good. Okay, so the cash received from customers will be 29,000. Agreed. Yeah, I like that. I like that. I like that. So I'll come back here and put the 29,000 where? Here. How we get that? Yeah, I think the board is still there now. So that's 29,000. Okay. Then let's go to the cash paid to suppliers. So that's workings number 2. So let's do the workings 2. Cash paid to suppliers. For cash flow, it's full of workings, a lot of workings, but straightforward. Open balance, that item, less closing balance, you are done. Anytime you're looking for something paid, open balance, that item, closing balance, you are done. So workings number 2, cash paid to suppliers. Cash paid to what? Suppliers. Ghana cedis in thousands. That one too. Open balance of suppliers, that's the creditors. Open balance of the trade creditors or the payable. So open balance, that item, that is purchases. Purchases for 2016, so that's purchases. because we want credit purchases. If there's no credit purchase, pick the total purchases. If there's no total purchases, then you have to pick the cost of sales. So 3 items that we need. We need a credit to our purchases. So credit purchases. If the credit purchase is not there, pick the total purchases. If total purchase is not there, pick what? The cost of sales. But for this question, the purchase is there. Yes, so that is it. Then let's the closing inventory. You are done. So the closing balance of the suppliers. So closing balance. So closing balance. Okay, so from the question, what is the opening balance of the suppliers? That's the payable or the creditors. It will be under the probably the current or liabilities, right? Let's go to the current liabilities and let's go and pick it. So from the question, if all of you have the hard copy of it, probably I'll stop moving it up and then you probably give me the figures. But if all of you does not have the hard copy, then I have to probably show it for you or like project it. Current liability. Trade creditors, opening balance is 30,000, closing balance is 28. So open balance is 30,000, closing balance is what? 28. So even if I can't do anything, not the open and closing balance. So when you go, what do? Open a workings and then write open balance, closing balance. In fact, even if you can copy that format alone, you get what? Yes. Let's calculate the purchases. What is the purchases figure? Who can tell me the purchases figure? Is it given in the question? If there's no credit purchase, pick the total purchase. There's no total purchase, pick what? Cost of sales. So how do you get the purchases figure from this question? Is it given to us? Is the purchases given? If not, then let's go and calculate it. Okay, we can calculate it. For 2016, we can calculate the credit purchase is not given. We are given the total purchase. We can calculate it. So workings number 3. Let's go and calculate the purchases. Wow. So this is what we call workings within what? Workings. So probably workings 3, purchases figure. Before we will finally come and put it in and find what? The cash paid to suppliers. So purchases. You will bring the cost of sales. Now before I calculate it, what is the formula for finding cost of sales? Cost of sales is equal to open inventory, right? Plus purchases, less what? Closing inventory. Good. So that gives us what? The cost of sales. Open inventory, purchases, closing inventory. Now you got the cost of sales. Now we are looking for purchases. So make purchases the subject. That's all. Make what? Purchases the subject. So that is it. Or if they want trouble too, you can go by this approach. We are going to use that one in the next 2 topics. You can go by saying, okay, if I should reverse all of them, I'll pick the cost of sales and reverse all the transactions, which has what entered in. I'll get the purchases if I should reverse everything. So it will be the cost of sales now open inventory they've added. So what do? We will less open inventory. So less open inventory. Let's put less here, but it doesn't matter. So let's open inventory. Then closing inventory to add. So add what? Closing inventory. And then we get it. So what's the cost of sales for this question? What's the cost of sales for this question? So let's go and pick it from the question. The cost of sales is what? 9,500. Good. So it will be 9,500. Open inventory. What is the open inventory? How will you get the open inventory for the years? For 2016, 2015. So we can get it. Inventory as at 2015 is what? 8,000 and what? 6,000, right? So the open inventory is what? 8,000. Meanwhile, the closing inventory is what? 6,000, right? So what's the purchases figure? You can tell me. Can you do the calculation probably for me? Okay. Okay, so the closing inventory is not 6,000, eh? You pick a wrong figure, right? Oh, okay. That's fine. Let's visit it again. Let's see. Wow. Okay, I picked the investment, right? Wow, that's fine. So 36 should be the open inventory. Good. And then the closing inventory is what? 39. So there's a movement of what? 3,000. Good. So that is it. Good. So what's the final answer? Good. So the inventory is 36 against 39. So 3,000, right? So that's 12,500. Good. So the final answer is what? 12,500. Is that right? Kindly confirm for me. Okay, so kindly confirm the answer for me. Now let's come and put it here. Purchases workings number what? Workings number 3. That's 12,500. Good. That's 12,500. Good. So now add it the closing balance of the cash pay. That's the payable. Or the closing balance here. We are going to subtract it. Then tell me the cash received. This one was the balancing. Yeah. So tell me the total answer for the cash paid to suppliers. So we are adding this plus this, then you put the answer down. Then we move on. Can you confirm the answers for me? So what do you get after putting 30, 12, 500, and then 28,000? 14,500. Good. So that's the cash paid to suppliers. 14,500. So if I should probably take this session, that's the total. 14,500. Good. So you go there and put it there. That's workings number 2. So workings number 2. Yes. Please, what next? So you go to expenses paid. Operating expenses what? Paid. What's operating expenses? Now until you pick the operating costs of the entity. If there's any non-cash item, sorry. Good, so I'll put it back. If there's any non-cash item, you'll probably reverse it. So, kindly get the workings for me. I'll take them off and do the next workings there. The operating expenses, you have to probably work on it. So kindly get that one for me, and then let's move on. Okay. Okay, so now let's continue. Now, we are going to our workings number 4. That will be operating expenses paid. So the direct method, we pick the direct cash flows. We will pick direct cash flows, then we are done. Okay. Okay, so working for operating expenses, right? Good. So you go to the question and pick the operating expenses paid. So let's pick the operating cost and reverse all the non-cash items from it. Then we are done. Yeah, you can probably how you calculate operating costs for that of profit and loss, the same thing. Just that if there's any non-cash item, take it off. Any non-cash item should be taken off. So that is it. So let's go to the question. So the operating expenses, they are distribution. Yes, there are only 2. Yeah. That's the distribution and admin expenses. These are the operating costs. Then what do you do? Depreciation and amortization has been added. And then impairment. So we have to reverse it. Good. We are going to reverse. Yes, because impairment is charged to admin or cost of sales. So here the impairment and the depreciation has been charged to what? Admin. So let's see the workings, how you're going to do it. So let's pick the figures. Distribution is what? Is it 1,200? Good. So distribution is 1,200.
will be index case in Benue State by the Benue State government.
Is that?
Yeah. My story is that I came from England on the 22nd of March for my mom's burial, and that was it. I was jet lagged, like everybody has asked, what took you to the hospital? I was jet lagged, went to the hospital to have myself checked. The doctor said they were going to check me, which they did.
Good. So that is it. Then admin. So the administrative expenses to that is 7,500. Even though they stated that depreciation, impairment, we will probably bring them, examine them last. So first we say depreciation. What is the depreciation charge? We have to subtract it, yes, because it has been added. Then you go to the impairment. All these ones are non-cash items. The impairment charge too is a non-cash item. You have to take it off. Good. So let's go and pick them. Depreciation charge for the year is how much? And then the impairment according to the footnote. Good. So the impairment loss is 3,500. I'll put it here. I'll knock it down. Then depreciation is depreciation charge for the year 2,000. I'll knock it down. Then there's prepayment. You can check that the prepayment, the open balance is 450, closing balance is what, 500. So expenses prepaid. Good. So expenses prepaid. Good. So prepayment. At the start of the year, the prepayment was 450. At the end of the year, the prepayment is what, 500. That's the open balance and closing balance. It's on the financial statement. It says it refers to what admin paid in advance. So if administrative expenses have been paid in advance, it has increased during the year by what, 50. So it means that during the year, admin expenses were paid in advance 50. And if you paid something in advance, the expense in advance, you normally subtract it from where? The related expense. Yes, because according to the prepayment, when we started the adjustments, we said that prepayment, you have to what? Subtract it because it's not for this year. So the prepayment of 50 Ghana cedis or 50,000 has been subtracted from the admin expenses. Though they paid it in advance. It's not for this year. But once it involves money, once they've paid, they have to bring it back. So it's a prepayment. Then you do your workings. 500 less 450. Good. So yeah, it's an additional expense. So we add 50. Yes, you have to add back to it because we paid. Good. There's a prepayment, take note. Assuming that during the year they paid admin by 50. If you like, check the question. Input your note 2. It says that included in administrative expenses, payment of 5,000 were made in respect of 2019, the next year. So how do you treat that 5,000? We say subtract it from admin expenses. So it has been subtracted from this figure. But they've paid it. Here we are calculating for cash that you have what paid during the year, or cash that you have received during the year. It's not necessarily like for next year. Even if you have paid for next 2 years, once you have paid it in this year, it should be in this year's cash flow, because to be part of the cash movement. So even though the admin expenses have been paid ahead of time, It has been subtracted, but under cash flow, you have to bring it back and reverse it. You have to bring it back. That's why you are bringing it back. Good. So take note. So finally, what is the operating expenses? Paid. These are operating expenses paid. All these ones are incurred. We have massaged it with a non-cash item to get the paid. Towards the answer, 1,200, 7,200, 3,500 plus 50. And then what do you get? If you have any question, kindly ask. So put them together for me and then let me pick the answer so that we go and put it there. Please, what do you get? 3. Okay, 3250. Let me explain the prepayment again. So 3250. Let me explain the prepayment again. Assuming that you are doing your normal P&L calculation, and then they've informed you that the admin expenses, let me even back it. Yes, let me back it with illustration. But this question is similar to what I'm coming to probably show you. Okay, before I go to that. After I do your calculation, you said that admin has been prepaid by what? 50 Ghana cedis. How do you treat it? It's in the footnote. Admin has been prepaid by 50 Ghana cedis, and you are preparing profit and loss statement. Let's assume that admin is what? 5,000, 7,500. So it means admin, originally what you do is this. Okay, so you write admin expenses into brackets, prepayment. Out of the 7,000 paid, 7,550 is being paid in advance. So they've subtracted it. So now you have what? 7,4,950, right? Good. Meanwhile, you have paid, though. You have paid prepayment. Not that you are owing, though. You have paid. Money has moved out, but you have subtracted it. It wasn't part of the operating expenses. Meanwhile, the operating expenses that you paid, that means that you paid, is what? 7,500. But 50 is not for this year. Because you know that it's not for this year, you have subtracted. In fact, here they've subtracted from this 750. So that's the final answer they've gotten. But it is what? For cash flow point of view, it's a cash movement. Cash has moved. So it should be part. So they should not subtract it. You have to do what? Reverse it. So you're adding it back. You have to add back and get the original figure. Original figure of what? Original figure of 7,500 and what? 50. Good. That is it. So over here. Good. Yes, that over here to be 7,550. But originally, in the question, we will give you admin of 7,4,950, right? Good. 7,450. Good. So this is the admin that we will key in. Plus the 50 back, it should give us 7,500. That is it. Because we subtracted the 50 from this and then we had this. So this is what they have incurred. But this is what they have paid. We want paid. For cash flow, we want paid. Good. So that is it. Thank you very much for getting it. Okay, so finally, so it means that when you go to the profit, you less it from the profits, additional expense. 3250 is what? Is the operating expenses paid. So we come here to our cash flow calculation and then put it there. Good. So operating expenses paid in bracket workings number 4. So what do you get? We have 3,250. Good. Then you subtract this. All the paid should be subtracted. Outflow. All the paid should be subtracted. So put in bracket. All the paid, put it in bracket. Nice one. So what's the answer? 1, 2, 3. The answer. So we call it operating cash flow before what? Interest and tax. So operating cash flow before interest and tax. What's the answer? What do you get? If your answer is ready, you can share it with me. If your answer is ready. So that is it. Good. So 11250. 11250. So that's it. That's operating cash flow before interest and tax. It means that that's its equivalent profit is a profit before interest and tax. So the profit before interest and tax, its equivalent cash, monetary cash, is the operating cash flow before interest and tax. So good news. So what's the next item? Let's assume that this is profit before interest and tax. What will be the next item? Interest and tax, right? So if this cash flow is before interest and tax, so the next item is what? Tax paid or interest paid. So interest paid and tax paid should be the last line item according to IAS what? 7. So interest paid and tax paid. It should be the last line item. Good. Okay. So that is it. So let's go and cover the interest paid and then the tax paid from the question. Don't forget that we said the interest paid, it can also be treated under what? Finance or financing activity. So that's why I put asterisk here. It means that you can also place it under what? Financing activity. You also right. So if you put it under financing activity, you also what? Right. So take notes. So let's go and calculate it. That's the next working. So workings number 5. So workings 5. Interest paid. Workings 5. Interest paid. But before we do the calculation, check for me if there was interest liability or interest expense or there's interest owing on the financial position. Interest owing on the financial position. If there's no interest owing the financial position, then there's no need for her to do the workings. Okay, so according to the question, let's say the financial position, check the current liability. So the current liability section, they are trade creditor, tax payable, proposed dividend. No, so there's no interest payable here. Now be with me, there's no interest payable. They are not owing any part of the interest. They are not owing. And there's no note that tells us that the interest they are owing. Nothing was said about that. So it means that where these two positions are there, where there's no interest payable and where there's no note saying about the interest, then it means that there's no interest owing. If there's interest owing, it will be part of the current liability and it's not here. So it tells us that where there's no owing, then the interest expense is equal to the interest paid. So you go to the P&L and you pick the interest expense from the P&L. So let's go to the profit or loss and let's pick the finance costs. That's the interest expense. So this is the interest payable. So that's what we are going to pick. What's the interest payable? What's the interest? You can tell me 1, 2, 3, 4. 1, 2, 3, 4. So the interest is 900, right? 900. Okay, I'll take that. That's the interest expense. Okay, so that's good news. I'll be get that. So that's the good news. So interest expense is what? 900. So the interest expense is 900. That's the same as the interest paid. You put in brackets just to good. So let's go to the tax page and then we are done. So take notes. Where there's no interest paid, interest liability on the trial balance or the financial position, do not worry yourself and calculate for it. Just copy it. Good. I hope everyone gets how we arrive at the interest of 900. That's any calculation. Yes, it's because there's no open and closing balance. Even if you force yourself to do it, there will not be any open and then closing balance. Let's try it here and see. So assume that you are doing it interest what paid. Open balance. Where are you going to pick it from? No, there's no be open balance. No closing balance. So the interest expense will be what? Open balance will be 0. But the interest expense will be what? 900. Closing balance to is 0. So finally the interest paid will be what? Will be 900. And this, you don't need to probably do this for the examiner. No. Just pick it straightforward and then you go. Okay, now let's move on. Now we are going to do the tax paid. Tax what? Paid. That's the workings number 5. Tax paid. So workings 5. Tax paid. Tax paid. Good. Now with tax paid, as usual, the 3-step approach. Open balance, that item, closing balance, you are done. So that's the tax paid. So now let's go and pick the open balances and then the closing balance from the question. Then you are done. So get notes that. So open balance, closing balance, that item. So if you are there with tax paid, open balance. Always if you want to see the open balance, go to the financial position. The financial position are there for what? For the balances. Good. And then the middle one, have you seen there are 3 steps? If you have realized my steps are 3. Open balance, that item. That item is in the P&L. Good. And then closing balance. Sorry. Good. Sorry, let me start all over again. Sorry, let me start all over again because the microphone was muted. Sorry. Yes, we are looking for the tax paid. The tax paid. And we said that if you are looking for the tax paid, follow the three-step approach. The three-step approach there, your open inventory. Sorry, the open balance of that item. And then that item itself, where do you get it from? The P&L. So much. What again? The closing balance, less it. If you are looking for something paid or something received, this is how you do it. How do you get it? Yes. If you are looking for something paid or something received, that item, its open balance, bring it. That item, its closing balance, subtract it. And then the movement, the one in the P&L, add it to it, you are done. So the same applies to what? The tax paid. So if you are looking for tax paid, pick open inventory of tax, or the open balance of tax, not open inventory. Open balance of tax, and then what's the income tax expense in the P&L? Go and pick it. The income tax expense, the CUD. Here is not the time for you to calculate CUD. No, the examiner knows that you can calculate it, so here they'll give it to you. The CUD, current year under and over deferred tax. The examiner is aware that for now, you know how to calculate it. So here they'll give it to you to be in the income statement. This is not the time for them to give you this, for you to get the income tax expense. No, not at all. So pick the open balance, go to the income statement, the P&L. Either you can write P&L here, we will understand. Or just write income tax expense. Or just tax what? Expense here. We will understand. Bring it. Go to the closing balance. Less the closing balance. So closing what? Balance. That's all. Have you seen? That is it. Good. So now here, let's just bring the figures. So let's go to the financial position and let's pick the amount. So the financial position, open balance, go to the current liability. The open balance for tax payable is 2,500. Don't forget that sometimes there will be deferred tax, right? Yes, sometimes there will be deferred tax. You know that deferred tax is non-current liabilities. When you go to the non-current liability section, you will see deferred what? Tax. You come to current liability section. You come to current liability section, maybe 300. You also see tax payable as a current what? Liability. That one was also, let's say, 1,000. So it means that the open balance will be, when you write the open balance, you add the two together. So pick the one under the deferred tax plus the current year tax, making 1,300. So the open balance will be 1,300. That's for that case, right? Good. But this question, there's no deferred tax, so you are safe. This question, this guy is not there. So there's no deferred tax. So then you bring the 1,000 there like that. How we get it? Good. Okay, so that's good news. So now let's go and pick them. Open balance is 2,500. Open balance is 2,500. I hope you can see that 2,500. Closing balance is what? 3,600, right? Yes, so that's 2,500 and that's 3,600. You write out those ones first before it escaped you. Now let's go to the P&L to go and pick the income tax expense. If the P&L is not given to you, the examiner will pass a note and inform you or to disclose the income tax expense recognized in the financial statement. That is it. So let's go to the P&L and pick it. But if the P&L is well prepared for you, there's no need for them to show all the footnotes for you. You have to go and pick it yourself. Good. So income tax, where are you? Income tax, that's the tax expense. Wow, those is a tax expense. That's what, 1950. Wow, 1950, what happened there? History of the day, 1950. Wow. By the end of the class, each and everyone will tell me what happened in 1950. Not to Ghana, worldwide, invention, war, conflicts. Then you list the closing inventory. You are done. So have you seen the three-step approach? Open that item, closing. Then you are done. So that is it. Good. So it means that open is 2,500, closing is what? 3,600. Then finally, we have the tax expense of what? 1950. Good. 1950. So that is it. Kindly know that I'll ask the history of the day. What happened in 1950? All the countries. What happened in 1950, including Ghana. We start from Ghana first, then move on to international. That's the issue of the day. So kindly add and give me the figures and let's see. What's the total? What's the total? Putting all this together. So that's 2,500 plus 1950. That will probably give us 4,440 less 3,600. Answer. So 2,500 less 3,600 and add back the 1950. Oh, this is what you get. I get 850. Oh. This is what you get. Kindly get me the answer. So is that 850? So that's the tax paid. So we can name it tax what? Paid. Good. So that's the tax paid. Good. That's the tax paid. So let's go and then put it there. Then you are done. So tax paid is 850. Let me shift this one upwards a little for us to get a place to write the tax paid there. So 900 and then 850. Good. So that's the end of the game. So this one, we'll call it net what? Cash flow. Net cash flow from where? Net cash flow. Net cash flow from where? OA. OA. So kindly what's the answer? Who tell me the answer? Net cash flow from where? OA, operating activity. So net cash flow from the operating activity. Who can tell me the answer? Okay, Madam Annette, if you can give me the answer, I'll be happy. Yes. Anybody can probably put them together and then with the answer. So 11,250 less 900 less 850. Good, 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 good. I have my answer here. So that's 9,500, right? Good. That's 9,500. Agreed. So we are done with the operating activity. Have you seen when you are using the direct approach, the operating activity becomes very short, so simple, so straightforward. But the indirect approach is not like that. So take note from. Now let's move on. So we move on to cash flow from where? Cash flow from investing activity. So investing. Now let's go to investing. Let's go to investing. So cash flow from investing activity. No shortcut in exam, so take notes. Good. So investing, what are you going to look for? Check the changes in the non-current asset and investment. You are done. Changes in what? Non-current asset and investment. You are done. Look for the changes in the investment and non-current assets. So for an investment is part of non-current asset. Just that this question, the investment was part of the current asset. So that is it. So now let's go to the PP breakdown. in the footnote, they say during the year, fixed assets disposed of during the year were sold for, fixed assets disposed of during the year were sold for 1,490. So that's an investment activity. So proceeds from where? Sale of PP. In fact, I'm tackling the easy ones, so before I go to the stubborn ones. Good. Okay, so that is fine. Now, let's see. This camera is following us, so this camera is following us. Good. So proceeds from where? Sale of PP. So proceeds from sale of what? PP. Good. So proceeds from sale of PP. Okay. If you think the investment activity, there are many. Obviously, we created two currencies. So right at the first one, some of them are pushed at the second one, then you are done. So let's probably reduce it. So you can just call it sale of PP. Good. It will be here, right? Good. 1,490, right? Is that so? Let's confirm. Let's confirm. 1,490. Good. Is there? 1,490. So that is it. 1,490. Good. How we get that? Okay. Now let's move on. Is there any other item again? Is there any acquisition? Is there any acquisition of PPE? So let's check if the PPE, there was acquisition during the year. If there's no acquisition, we are done. If you check the cost, the composition, there's no acquisition. So there's no acquisition during the year. We are done. That's good news. Now let's go to the investments that were added to the current asset. At the start is 8,000, right? At the end is what? 6,000. So it seems that during the year, investment, 2,000 of the investment were sold, right? Oh yes, so it was disposed of. Ideally, it was disposed at the cost. That's the assumption. But normally, you can either sell it above or below the cost. Probably it's at fair value. But if the fair value is not given, what do? Just find the movement. So the movement is 2,000, right? So that's inflow. So you add it to your investing activity. Good. But take note, if there's a note in a question that suggests that this investment is a short term and it's highly liquid, then we are not going to probably do that. We have to add it to the cash and cash equivalents. Yes. We said that cash and cash equivalents, they are short-term, highly liquid investments. Short-term, highly what? Liquid investments, which can be converted into what? Known amount of cash without any significant changes in what? In value. I have 2,000 cedis investment with a certain bank or certain institution. If I should go there today, I'll take my 2,000, no discounting. And it's short term, like it's for just 3 months, 2 months, 91 days, probably within a year. That's the short term. When you see investment under the current assets, it's probably it's receivable within the year. But still, they have to probably inform us that it is what? Highly liquid. So take note. So 2,000, we have to add it to it, and then we are done. So let's add 2,000. That's the sale of investment, right? So sale of investment. That's the proceed from sale of investments. Then you do your workings. It's 8,000 less 6,000. So probably we get 2,000. It's a positive amount. How we get that? It's positive. Yes. Okay, so is there any other investing activity? In fact, the truth of the matter is that as soon as you are done with operating activity, you finish the entire question soon, because the investing and financing, they are not as many as what the operating activity. And if you use the direct approach, the answer is a little bit short than the indirect approach. Okay, so that is it. Now, if that's all, you add them and push the answer here. So adding this will be 3,000. So let's push it here and name it 3,000 and what? 490. What's the name given to it? We call it net what? Net cash flow. Is there any other investments in the question? Yes, there was a note. Let's go to that note. Yes, there was a note. Let's go to that note. I just let's write the 2,000. Well, we nearly cleaned that 2,000 here. There was a note. There was a note. Okay, the note says that the interest and then the investment income. Yeah. Is there any investment income received? Because aside the non-current assets, you have to also check whether they have received dividend or they've received interest or they receive rental income. Any of the other income that they have received, it comes to investing. Any other income that they have what received. So note 3 says that income from investment represents interest and dividend received. The underlying word is what? Received. It has been received. So that's the underlying word. So you have to go and pick it and then bring it here. So let's go to investment income received. The figure is 1,100, right? So that's income from investment. Gain from disposal, we've talked about that one. So to avoid oversight, go to the P&L, check if there's any other income there, and check if they've probably received it during the year, then you bring it there. So investment was income. Yes, investment income. That's 1,100 investment income. Investment income. 1,100, right? Good. What again? Probably that's all right. So that is to avoid cancellation, though. Other than that, oversight. To avoid oversight, when you pick the item, check through the notes, come back, and then you are done. So let's put them together, and then you'll be fine. So 3,490 plus 1,100. That's 4,590, right? Hope you can see the board. Hope you can see the board. Okay, so that is it. Okay, so we get 4,590. 4,590. So putting all together, I'll probably write it the next line because I have to name it. So 4,590. And the name will be net cash flow from where? From investing activity. No shortcut in exams. Then we are done. I'll continue the financing from the other side of the board. So if you don't have this in your notes, kindly put down before we continue to the next session. Good. So this is October 2017 past question. So that is it. Kindly put your questions on the screen. I'll pick it up and then answer them. Yeah. So that is it. Okay, so I believe we can move on. So the next one will be what? Cash flow from where? Financing. The space there, public might not go there. So let's go and do it at the other session, right? Let's go and do that other section. So let's do it on another section. Wow. Good, so I'll do it there for you to see it clear. Okay. Good, so I'll do it here. So cash flow from where? Financing activity. Cash flow from financing activity. Good. So cash flow from where? Financing activity. This one basically talks about how you get the funds to probably support your operational activity and your investment opportunities. So check the equity, check the non-current liability, you are done. Match the equity one after the other, all the equity item. So let's see. So let's go to the financial position and check the movement in the equity and then the long-term liability or long-term debt. Ordinary share capital, it has probably moved from 60,000 to 75,000. With this, the increase of 15,000, we are going to assume that it's cash because nothing was said in the question. But in a real case scenario, when ordinary share capital increases, that does not mean they've received cash. But sometimes they can also issue shares for free. That's the bonus shares, or in taxation, we will call it deemed dividend or market capitalization. So just find the difference, then you are done. Good. So 70 less what? Is it 15,000 or 5,000? It's 15,000. Good. So it's an issue of shares for cash. Issue of shares for cash. So issue of shares for what? For cash, into bracket the 75,000 current value less the previous value. Then we had 15,000. Kindly put on the first currency because you probably do adjustment there. Good. I hope you get it. Okay, good. So I think it's clear now. Clear now. Now what next? Now what next? Let's go to the debenture non-current liability. At the start of the year, it's 25,000 cedis. At the end, cash, it means that all the debenture were what? Redeemed or paid. All the debenture were redeemed or paid during the year. So, or repayment of what? Loan or debt. That's an outflow. So probably put in brackets here, and then you are done. So redemption of what? Debenture or repayment of debenture. So repayment of what? Debenture. Please, here, don't go and do workings for us. So here, no work is 25,000. Because if you tell us that, okay, it's 25,000 less 0, you mind you. Yes. So that is, let's go to the board. Let's go to the board. So to be repayment of the debenture 25,000. This one is what? Outflow, because probably funds are moving out, money is moving out, so it's an outflow. All outflow should be in brackets, inflow positive. Now let's move on. So now we are done with the one on the financial position. Now let's go to the footnote. Is there any item? Is there any transaction cost on the issues of shares? Is there any charges on the repayment of the loan? Is there any interest? If the interest paid here, interest paid will be classified under the financing. I think I've explained that this interest paid can also be a financing activity depending on your core activity. So take note on that. Now, once you know that financing activity talks about equity and debt, long-term debt, any cost relating to equity and debt, bring it to financing. Example, transaction cost, issue cost, debenture, interest. Yes, all of them are what? Financing activity. So let's go to the question and see if there's any note giving us dividend. Yes, so dividend. Yes, in the trial balance, sorry, in the financial position, there's dividend there. That's the open balance, closing balance. It means that we are going to do workings on that, and then we are done. That's our last workings. And we are done with the question. Good. So, note 2 says that dividend proposed for the year 2016 amounted to 2,500. That's the dividend proposed, 2,500. So, as usual, now we are looking for what? Dividend paid. Dividend what? Paid. Dividend paid. This was our last working number. Our last working number was workings 4, right? So let's go to workings 5. So workings number 5, dividend paid. Dividend what? Paid. Like I said, for cash flow purposes, anytime I'm looking for paid, don't worry. Open balance of that item, where can you find it? Financial position. That item. So that's the dividend proposed. So you bring the dividend proposed. Then the closing balance. Closing what? Balance. So how we get that? So take note nicely. So what's the open balance of the dividend? Let's go to the financial position and then pick it and pick the closing balance as well. Then we are almost through. So open balance for dividend is 1350. So 1350. Don't forget your 3 zeros. Closing balance is 1,500. And then the dividend proposed is 2,500. The second footnote, 2,500. And always, as usual, you less what? The closing balance. You less the closing balance. So you put the closing balance in the nice brackets. So what's the dividend paid? So this becomes dividend what? Paid. Then you are done. So dividend paid will be 1350 plus the 2,500 plus less the 1,005. So what's the answer? Can I get an answer from anyone? 1,000. So that's 2,350. Agreed. Is that true? Is that true? Is that true? Yes. Is that true? Yes, it's true. That's the dividend paid. So that's the workings. What do? You push it here as what? 2,350. It's an outflow. We are paying. So how we get it? Good. So that's good news. So I believe that's the end of the game. So add it. It will fall under the first currency. Let's go up. How to get a dividend? Okay, let me give you some time to probably copy it. Let me give you some time to copy it. Just let me know when you are. Yes, it's 2,350. So let's add all this and then push it here. Then probably we are done for the day. So let's see, 15,000 less 25. So that's 10,000 negative. 10,000 negative to 350, 7,000. Please, any answer for me? Any answer for me? So that will be 15,000. 15,000 plus 25. Plus 2,350, right? Oh, trouble. 7,650. So you put it here as 7,650. Then you name it. It's in brackets. That's the cash outflow. If you know that it's negative, you can call it outflow. But if you don't want trouble, let's call it net cash flow from where? Financing. So here will be net what? Cash flow from where? Financing activity. FA. Financial accountant. Good. So that is it. Now I want everyone to be with me and come to do the terrible one, the terrible stage. It's the balancing. Can I dash this session? Yes, can I dash that session? Okay, I can do that then. Thank you. Now, you're supposed to add it and add the three answers together. Net cash flow from where? Financing. Good. Go to net cash flow from where? Operating activity. What's the net cash flow from operating activity? This is the net cash flow from operating activity. And this is the net cash flow from where? From investing activity. Putting one, two, three together, we have what? The net cash flow for the year. But that figure, we can probably get it without adding these three. Yes. So net cash flow for the year. So much. They leave it empty. When we add cash and what? Cash equivalent at the start of the year. So at the start of what? The year. At the start of the year to it. So much. In fact, it will give you cash and cash equivalent what? At what? At end or at close. At the end of the period. But these two figures, we can get them without worry. Yes, how? That's the closing balance of the cash and cash balances. So cash and then the bank balances. That's the closing balance. Don't forget, if there's any overdraft, you subtract. So let's go and pick the cash and cash equivalent, the closing balance or the closing balances of the cash. So cash at bank and cash in hand, 450 and what? 500, right? Wow. That's good. Is that 450? No, cash at bank, that's 8,000 and 9,740, right? Okay. So what's the one at the end? At the end is 9740. 9740. Good. So 9740. That's at the end. 9740. Is that so? Yes. And then at the beginning is what? 8,000. So right at the beginning, that's at the start of